G'day folks, welcome back to Pete's Investing. It's March 15, 2024. This is the nat gas price update. We were in a bearish trend, but that's been paused, and that's due to this divergence retrace that we've seen overnight. We reprojected that, and that's actually hit its targets. And also just stay tuned for the tops and bottoms and a trading idea at the end of the video. I'll go through that with you as well. So I'll go through the nat gas commodity price first, and also some ETFs for you. So first off, on the nat gas price, we've got the ADX 25 on the weekly, it's bearish. On the daily, it's bearish, but it's broken up due to that bullish divergence on the hourly chart. The CCI 150 here is still below its moving average band, and that's still a bearish trend, so just be careful about going long, don't go long. The daily broke below that band initially, and then it's now touching it again, so we may see it break into that band in the coming hours. And on the hourly, as I said, we had a bullish divergence versus lower lows on the price, bounced up, hit our initial target, and it's actually bounced as high as the 61% level. So not saying it's going to reverse fully at this point. We need to see it break much higher and above this resistance. Let me see that on the daily. That's a key resistance we want to get past there, just to be more bullish. So at the moment, just pay attention to these moving average bands in the CCI, and trade in accordance with those. So when the CCI is below that band on both the weekly and the daily, go short, and when it's above that, you go long. Again, I'll go through that example at the end of the video. And now going on to the other ETFs, we've got the BOIL, ProShares Ultra DJ UBS. And this has got a different pattern. The ADX is bearish on the weekly, bearish on the daily, and just broken up bullish on the hourly, and that's due to that divergence, and it bounced off that support line we saw at 1347. You can see there's a double bottom on the daily, and there was also a bullish divergence on the CCI versus the price on the daily, and the weekly is still showing lower prices on the price chart versus higher CCI movement, which is a bullish divergence, but it's very slowly moving in the opposite direction at the moment. ProShares Ultra Short Bloomberg, KOLD. Takes a bit of time loading this sometimes. So KOLD, you can see there on the weekly, it's bullish on the ADX. On the weekly, bullish on the daily, and broken down fresh bearish on the hourly. The CCI 150 is also showing a pretty strong bullish movement, and you can see there versus a pretty major movement on the price chart as well. So that's moving in line with the price, no divergence. There was a bearish divergence on the daily that broke down versus higher highs on the price, hit our target area, and came down and bounced off that 61% level. And that's always a key area to look out for. That's at 106 at 20. And on the hourly chart, we had a small, on the CCI 150, a small bullish divergence on the CCI versus a double bottom on the price, bounced up, hit our target, and this also went as high as 61% as well on the hourly. Lastly, UNG. And UNG will have a similar movement as well to the commodity price. You can see there, bearish on the ADX on the weekly, bearish on the daily, and a fresh breakout to bullish on the hourly. We've got a bullish divergence on the weekly CCI versus lower lows on the price, bullish movement on the daily versus a price on the daily as well, and on the hourly, it's actually, there's no divergence, but it's actually bounced up in accordance similar to the commodity price. So let's now go to trading idea. So remember, the major rule is when the weekly and the daily are aligned in the same trend on the CCI 150 above and or below these bands, we take that trade in that direction. Now we don't trade at the moment because the weekly is in a short positioning. The daily has just fresh breaked out to the downside, so you may have possibly entered one or two trades to the downside, but just to demonstrate how you would have traded this long positioning, and you would have stopped trading those long positions at that point there. If we go to this set of charts, over here with the daily, so remember taking long positions only, going from that point there, back test, taking long positions only, and you would have stopped taking long trades when it entered the moving average band at that point. So both, this is the average down approach and this is the stop loss approach. So the average down approach, if I move that cursor there to where you would have stopped taking trades, it generated 5,390 on the average down approach and 790 on the stop loss approach. And the rules for those are, just stay tuned to the very end of the video, I've got the rules displayed. So had you taken a trade when that broke below the moving average band to go short, I've got the back test there for you. And remember the weekly was also showing below the moving average band on the weekly. So had you taken that short trade, you'd have had these two trades made with one averaging down, and that would have returned $130. And the stop loss approach, you'd be down $20 because your stop loss method. So again, you want to get out of the trade as soon as possible when it hits this band, and you would have done so successfully on that trade as well. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.